Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a really popular stock that recently announced earnings for the full year of 2022, and that stock is Meta Platforms, previously known as Facebook. We can see that over the last year, the stock is down 5%, but interestingly enough, from their lows in November of 2022, where they were trading at around $90 per share, they are up more than 100% to $202 per share. So they have increased quite a bit from their lows over the last year. And so we're just going to look into some of the recent news that came out surrounding Meta, and then also look at their financial statements to figure out what the intrinsic value per share for their company could be from a value investing perspective. And so right here we can see this article points out that Meta is currently exploring plans for a Twitter rival product. And in particular, they're referring to it as a digital town square to be competitive to Twitter. And also they point out that Twitter, ever since Elon Musk took it over last year, has actually been facing some adversity, especially with their advertising base. A lot of companies have pulled back spending, mainly because Twitter moved to restore some unwanted suspended accounts, and also the release of paid account verification resulted in scammers impersonating firms. And so a lot of companies pulled back on spending money on ads on that platform, which was one of their main sources of revenue. And so right now, obviously, with Meta's biggest platform, Facebook, they're currently struggling to attract a younger audience. A lot of younger users are gravitating towards TikTok. And so Facebook and Instagram are struggling to attract users, and their investments in the metaverse are showing little signs of paying off in the near term. It's more of a long-term investment. They point out right here that TikTok is the biggest competition for Instagram right now. But some people are saying that the history of Meta is that they're really good acquirers. They did acquire Instagram and other companies that added to their product line. They're not as good innovators as they are acquirers, or they're not as good innovators and developers as they are acquirers. And so copying Twitter in this case would be a defensive move. So basically like a social media app war going on right now. And this is just Facebook's way of competing with the increased popularity of TikTok. And then lastly, they point out that Meta shares, as of writing this article, this came out on March 10th, they were trading at $181 per share, and they had gained around 51% so far this year to date. So they are increasing from their lows since November of 2022, as I pointed out, and also from the beginning of the year. But obviously, in terms of product line, they're seeing some pretty steep competition from TikTok and Twitter at the moment. And so right here, we can see in their financial statements, this is their balance sheet comparing the date of December 31st, 2021 to 2022. During that time period, total assets are up from $165 billion to $185 billion. Most of their business is financed by equity compared to liabilities. They have $125 billion of equity and $64 billion of retained earnings, which is down from $69 billion year over year. This is their income statement right here. We can see they're comparing the years 2020, 2021, and 2022. Their revenue is down slightly year over year from $117 billion to $116 billion. So that's a decrease of around 1%. For their bottom line net income, we can see it's a much bigger decrease from around $39 billion to $23 billion. So that's a decrease of around 41% year over year. So obviously with their investments in the metaverse, Mark Zuckerberg has basically said outright that he's anticipating that the company is going to continue to lose money in the short term while they continue to invest in the metaverse. And so lastly, right here, we can see their cash flow statement comparing 2020, 2021, and 2022. Operating cash flow for 2022 was $50.4 billion. And we can also see they repurchased a lot of Class A common stock at around $27.9 billion. So that's more than 50% of their operating cash flow for the year. But that metric is down from $44.5 billion of repurchased common stock in 2021. So they're still prioritizing returning value back to shareholders by repurchasing stock, but not as much as they were in 2021. So right here, this is a discounted cash flow model to figure out the intrinsic value per share for Meta. Yahoo Finance is estimating that the company is going to grow at around 3% for the next 5 years. So I sliced that in half to be conservative for the next 5 years after that. They had around $19 billion of free cash flow in their most recent full year. And they also have around $13 billion of cash on their balance sheet after subtracting their current debt. And they have around a little over 2 billion shares outstanding. And that puts their intrinsic value per share estimated to be around $105 per share, which compared to their current share price means that they are currently not trading below intrinsic value per share. They were in November when they were trading around $88 to $90 per share, but at the moment they've increased more than 100% since then. And so based on these estimated growth rates, they're currently not trading below intrinsic value. I compared them to some of their competitors, mainly Apple and Google here from a financial ratio perspective. We can see that across the board, they have a higher gross profit margin. They have the lowest net profit margin at the moment, mainly because of their investments in the metaverse. And then in terms of return on assets, they also have the lowest return on assets. About middling of the pack PE ratio here at 21. Apple's is at 25 times earnings. Google's is at 20 times earnings. And Apple is the only company that pays a dividend. They pay 90 cents per share. Meta and Google don't pay any dividends. So from a competitor analysis perspective, it looks like they're beating out the competition in terms of gross profit margin, but not really in any other area. All around, it looks like Apple is probably doing close to the best just because they have the highest net profit margin and return on assets, and they also pay out a dividend to shareholders, which is obviously pretty attractive compared to Meta and Google that don't pay a dividend. And so to end off the video, I wanted to compare them to some of the companies we've looked at in past videos. We can see these are the companies that were trading at the best share price relative to intrinsic value per share over the last 20 or so videos. And we can see that General Electric and Albertsons are still the only two companies on this list so far that we've talked about that are trading below intrinsic value per share. Meta did make it onto the list. They're trading at 191% of intrinsic value, so 1.91 times their estimated intrinsic value per share at the moment. And then in terms of growth rate, they didn't make it onto the chart just because they have a growth rate of only 3%, so that doesn't make it on there. General Electric still has the highest at 44%. In terms of gross profit margin, they actually got pretty high up here, taking the second place spot at 79%. Adobe still holds the number one spot at 89%. And then in terms of net profit, they came in fourth with around close to 20% net profit margin, right ahead of Johnson & Johnson and behind McDonald's. And then lastly, in terms of stock performance over the last 5 years, Tesla and AMD are still way ahead of the pack. Microsoft is coming in third place here, and we can see that the stock performance sort of trails off to Chevron's 35%, which is the worst on this list, but it is top 10 out of the companies we've looked at so far. We can see Meta Platforms over the last 5 years is only up 14%, so not good enough to make it onto the chart. So in terms of comparing them to the other companies we've looked at, obviously these are different industries, so they're going to be different. But I do like to do this just so that we could look at the efficiency and just compare the companies that we've looked at against each other. But in terms of comparing them to other companies, it looks like in terms of profit margin, Meta is one of the best we've looked at. But in terms of stock performance, estimated growth rate, and their current trading price relative to their estimated intrinsic value, they are not doing that good compared to the other companies we've looked at. They're doing decent in their industry right now compared to the other big tech companies, but it looks like Apple currently takes the cake in terms of financial ratios, and obviously they're not trading below intrinsic value per share right here. So I'm not too sure what to make of Meta Platforms just because, according to the estimates, they're not trading below intrinsic value per share. And in comparison to their competitors, they could be doing a little bit better. The investments in the metaverse at the moment are really dicey. Nobody really knows how that's going to work out, but they are up more than 100% from their lows in 2022. So let me know in the comment section down below what you guys think of Meta Platforms. Is it a buy at the current share price? And let me know if you guys own any shares of Meta. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.